All right, let's talk about something else that is perhaps difficult to predict, and that is the composition of the Federal Reserve. But our next guest has tried. He's Brian Gardner, Stifel Chief Washington Policy Strategist. Brian, I'm not going to ask you about your lawn situation. We'll stick to the Federal Reserve. So, we do have some prominent Fed members whose terms are up, either as voting members or on the Fed at all in the next couple of years. Let's just start with the tippity top, right? Let's start with Jay Powell. His term is up, in 2022? And do you think he will be or will not be renominated?
Probably will be renominated, but it's not a slam dunk. And I think the markets seem to be acting like it is a slam dunk and that he is definitely going to get a second term. When you look back over the last 40, 50 years, that's the norm. Incoming presidents usually renominate the sitting Fed chairman. President Trump with Janet Yellen, that was the exception. So keeping Powell goes back to what is really the recent norm. But there's a lot of pressure within Democratic circles to put their own person. They're a progressive, more of a dove, looking at social factors, diversity, inclusion, those type of things. So it's not a slam dunk for Powell to get a second term. I think it's better than 50-50, but boy, I wouldn't go much above 50-50.
Brian, should it be a slam dunk, though? Isn't it better to have Powell aboard this ship as they do think about raising rates in sometime in 2023 and tapering bond purchases?
Sure. Look, if you're looking at it from the administration's position and the politics of 2022 and beyond, I think it makes a lot of sense to keep Jay Powell around. He's a known quantity. He has a good relationship with the Treasury Secretary. He has good relationships up on Capitol Hill. And because he's a known quantity, you know what you're getting. And that steady helm as you get through the midterm elections and you start looking at the 2024 elections. So I think there's a lot there going for Powell. At the same time, the opening of the Fed chairmanship doesn't come around very often. And it's, kind of a once in every 4-year opportunity to really put the mark on the Federal Reserve. And for progressives who are battling the administration on a host of other topics like infrastructure and tax, I think they're going to push hard to get their own person in there. Now, there's a compromise, of course, to be had, as there always is in politics, to keep Powell and use the other 3 openings. There will be 3 other openings at the Fed. Use those to fill them with progressives and still start to move the Fed in a more dovish direction with Jay Powell leading them. So maybe that's the end game here.
Brian, maybe stepping back a little bit, how much of a political football right now is the Federal Reserve? After the financial crisis, it became a boogeyman of sorts. You had folks like Rand Paul and his father, Ron Paul, rising in prominence, criticizing the Fed. It's not quite the same situation today. Is there an avenue for Fed officials to just operate quietly, which I'm sure they'd prefer to do, kind of inside the bigger DC infrastructure?
No, I think the days of operating quietly are gone. Certainly, to your point, Myles, there's less pressure, there's less controversy surrounding the Fed post-financial crisis. And I think Jay Powell is seen as doing a good job during the pandemic. So he's increased his credibility. He's increased the credibility of the Fed. But the Fed has been getting involved in issues outside of its statutory mandate. The statutory mandate of maximum employment and price stability, they're getting into social issues. They've been pushed on climate. They've been pushed on diversity and inclusion. And by definition, by nature, that brings them into political controversy. So I don't think the Fed can extract itself anymore from politics. It is a political creature, and it's deeply ingrained in American politics today, despite the fact that I think its credibility has in Washington. Some investors, I think, will disagree with how they are in the markets, but within Washington, I think the Fed's credibility has recovered some of its luster.
Brian, I'm curious about beyond Jay Powell, the rest of the composition of the Fed, if there is any risk to markets in particular that there will be any changes in the next couple of years that could maybe make the transition to tapering or to higher rates, I don't know, call it into question at all or change how it's going to look?
So in addition to the Powell seat, there are potentially 3 other seats open. There is a vacancy currently. Vice Chairman Clarita's term is up in January, and Vice Chairman for Supervision Quarles probably is leaving at year end. And I won't go into the details of that. We'll just leave it at he's probably leaving at year end. So there's an opportunity for 3 spots there. Now they could move Governor Brainerd over to the Quarles position for the vice chairman of supervision. You still have 3 board seats to fill. And I don't know that they're going to be filled instantaneously, but over time, I do think you're going to see some nominees go to the Fed who have, more dovish leanings. And so where Clarita and Quarles have been close allies of Powell, you may have board members coming in who are more dovish, who look more at maximum employment part of the mandate than they are concerned with price stability. And so there could be internal pressure on Powell to slow tapering, to take a more dovish stance going forward.
And Brian, there's some reports out this morning that there has been some form of agreement or whatever you would like to call it on a $1 trillion infrastructure package. That's down from the administration's goal of over $2 trillion. As part of that $1 trillion plan, what are you hearing in terms of it including tax increases?
So this part of the plan does not include tax increases. Certainly not what was proposed by the Biden administration in their two plans, the American Families Plan, the American Jobs Plan. There would then be a follow-up in a reconciliation package, which would have the non-traditional infrastructure package, healthcare and other social spending programs. And that would probably be coupled with the tax component. And in my base case is that there will probably be a tax hike coming in the fall. I just think it's going to be less than what the administration has proposed. So I think on corporate taxes, I'm looking for 25% rather than 28%. On capital gains, I'm looking for something in the neighborhood of 28% instead of ordinary income. So probably going up, less so, but this is not directly part of the framework that is being negotiated today. And they're going to have a meeting with between the bipartisan group and the White House. And just a word of caution, I mean, there was a lot of headlines out last night. There is no deal here yet. There's an agreement on a framework, but a framework and an actual bill that leaders and members of both sides have signed off on, that's not done yet. And so there's just tons of pitfalls in the Senate, in the House, where progressives could blow this up, where you're not going to get enough Republicans. But to get to your question, Brian, taxes is not part of what the headlines of the day are, but I do think they're coming, again, going up, but at a slower rate, to a lower level than was previously proposed.
Yeah, as always, a lot of back and forth still yet to come. Brian Gardner, thanks so much for your perspective this morning. Great conversation. Stifel Chief Washington Policy Strategist.